doesn't sound like there's a big difference between high-low range and true range bars. Well, I have to tell you, I was the conceptualizer, inventor of the true range bars. And in order not to step on my rights relative to the true range bars, people came up with, well, we'll just do the high-low range bars. But there's a huge, huge difference. And that is the convention for high-low range bars is to have exactly whatever range one specifies. So if you specify a 10-cent high-low range bar and you have a price at 100 and you have a price at 120, what the range bar will do is it will print a high and close at 110 and an open and low for the next bar at 110. It will insert fake data, synthetic data would be a nicer name for it. It'll insert synthetic data onto the chart so that without exception, all of the bars will be this 25-cent bar. All of the bars will be exactly 25 cents. That's regardless as to whether or not, for example, this price right here actually really traded or not. Okay? So every bar is 25 cents regardless as to whether or not that price really happened. With my bars, with the Kase bars, no false data is ever used. And so, for example, you could see here, there was a gap on the chart. It wasn't artificially filled in. And if you look at, for example, this area in here versus this area in here, this bar's close was the same as this bar's open. This bar's close was the same as this bar's open. And that's because just by definition, the bar gets cut off at a certain price and it starts at a certain price in order to force it to be 25 cents. Where with the Kase bars, let's say you have a 25-cent target, and you get one tick that gives you 24 cents, and another tick that gives you 27 cents. It'll immediately print 24 cents as the close of one bar, and 27 cents, whatever that price constituted, as the open of the next bar. In other words, it looks at the last two ticks, the one that of course, if it gets right at 25, it'll print that. But if it has one tick that's shy of the 25, and another tick that exceeds the 25, it'll pick the one that's closest and plot it on the screen. So you're not forcing the market to artificially inserted data to hit the target. That also has the benefit of not allowing artificially low ranges. Because if you have a market where you're just not getting 25 cents, the actual range is 50 cents, it's jumping by 50-cent increments. With the range bars, you won't know it because it'll artificially plot 25-cent bars. With the Kase bars, if the minimum tick difference is 50 cents, it has no choice but to plot a 50-cent bar.